Yeah, so today talking about Lumina Gold. It's the largest project in Ecuador. Am I supposed to be able to see the slides here?
Yes, they should pull up.
Okay.
Oh, there we go.
Great. That's helpful. So talking about the largest primary gold deposit in Ecuador. So it's a large gold copper porphyry. As it sits today, we're sitting on 17 million ounces of gold, roughly 2 billion pounds of copper. We did a 36,000 meter drill program in 2021 and 2022. So we do expect that resource to grow when we do the PFS update towards the end of March. Early April is our current planned timing for that. The 2020 stats, it was a 25-year mine life, about 370,000 ounces of gold production a year, about 50 million pounds of copper a year. At today's long-term commodity prices, roughly, it's about a $2.5 billion NPV. And as I said, all the drilling's been completed for the PFS that we expect here in the near term. Today, and this is a bit dated now, we're sitting at just under a $200 million market cap. We're being sole funded by Ross Beatty off a line of credit that he's provided the company that's convertible at 42 cents. Ross is the largest shareholder of the company at 20.2%, and their management holds about 9%. An Ecuadorian group of investors holds 18%, and Route 1 out of San Francisco holds 7%. So those are the largest shareholders of the company, controlling about 55%. Coverage-wise, we've got Red Cloud, Haywood, and Raymond James covering the stock right now. So Ecuador, for those of you who haven't followed it, it's come a long way since we entered the country in 2014. Mining exports have gone from roughly, $300 million a year to now over, this slide's a little dated, but it's about $2.7 billion in 2022, predominantly coming from the two mines that are producing. So Mirador, a large open pit copper gold project, and Fruta del Norte, which is producing about 450,000 ounces of gold a year now. And obviously, as they've progressed and reformed the fiscal regime, we've seen the Fraser Institute consistently increase their ranking as a good place to be for mining. It's now ranked 24th out of 84 jurisdictions globally. So just Cangrejos and where we are, we're down in southwest Ecuador. It's a huge infrastructure advantage. We're sitting 40 kilometers from the Port of Bolivar there, where Mirador is shipping their copper concentrate out of. So it's a short drive for us for our copper concentrate to go out of eventually. Communities, there's none on the deposit. The nearest community is about 7 kilometers away. There's also no indigenous communities in this province of El Oro where we're located. There's lots of water there for the 80,000 ton per day operation. There's hydropower available, which is great. It's between 6 and 7 cents a kilowatt hour, so another big cost advantage for the project. So how we position the company, it's the 37th largest gold resource in the world. It's the 12th largest undeveloped resource by production capacity. Grade-wise, we're about 0.73 grams per ton gold equivalent in measured and indicated. If you were to flip that into copper equivalent, which is kind of how we think about the asset, we think of it as a large copper porphyry style deposit, you'd be at about 0.5% CuEq, which would be higher grade than Cobre de Panama, higher grade than Mount Milligan, and a similar grade to Red Chris, all of which have been built in the last few years here. So, these are very buildable projects, and it's all about scale and efficiency. CapEx from the 2022 study is $1 billion. I'll talk a little bit about how we're planning to approach that with the PFS. And as I said, PFS will be coming out within the next month here. So the project is 2 pits. You got the Gran Bestia pit and the Cangrejos pit. The Gran Bestia pit is going to grow from what you see here in this diagram based on the step-out drilling we did. The Cangrejos pit has now been drilled off fully to indicate it so that it can be used for reserves in the PFS, and same for Gran Bestia of what was in the 2020 PEA. So this is a cross-section here. You can see on the left-hand side that last vertical hole on the northwest edge. That was where we stopped the drilling in 2020 for the old PEA and the old resource. We've now subsequently drilled step-out holes off that, so you can see where the block model stops here on this diagram. And we've had some pretty good results, 282 meters of 0.9, 450 meters of 0.8 gold equivalent. So we do expect to add quite a few ounces and pounds of copper in this area of the deposit. So just the old study here, production, as I said, 370,000 ounces a year, so great scale. Cash costs, first quartile, $600 an ounce AISC when you net off the copper byproduct. The IRR at today's prices would have been about 22%. Now, obviously, we all know there's been pretty dramatic inflation in the last 2 years for CapEx and OpEx for companies. So the good news for us is power costs are the same. Obviously, diesel's a little bit higher. Capital equipment items are higher now. The nice thing is in Ecuador, they got rid of the import tax duty that was about 7% in our last study to bring in capital goods into the country. So that's now 0. So that helps us a little bit. The other thing we're looking at doing as part of the PFS is to phase it differently. So instead of going 40,000 to 80,000 tons a day, we're going to come out with 30,000 tons a day, 60,000 tons a day, and then 80,000 tons a day. When we looked at that on an apples-to-apples basis on the 2020 numbers, it seemed to produce a very similar NPV and very similar IRR. So we don't think it hurts us, and we think it helps us with the initial capital and fighting the inflation that we've all seen. Just on the MET results here, we've run another 5,000 kilos of material as part of this year's program in Lima, and we've done another pilot plant on the material. So we are expecting some higher recoveries. Our last press release in January talked about the gold recoveries. We expect to be able to get those up from 82 to 84% on the gold side. We're still waiting for some final results on the copper side, but we're hoping those get a couple points higher as well with what we're seeing out of the initial test work. And sorry, I should probably mention that the main products are going to be a copper concentrate with high gold values, and then a silver and gold doré. Those are the two products that are going to come out of the deposit. So work that's been completed, we've now finished the resource update internally here. We've confirmed the flow sheet. We've confirmed the new tailings plan. So we're pretty far down the track on a PFS. Asanko is leading the PFS for us, and they're doing a good job, along with all kind of our hand-picked QPs that have worked with the Lumina group for 15, 20 years across all these different porphyry deposits that we've de-risked and sold over the years. So just kind of overall project timeline right now. We finished the 36,000 meters of drilling. Shortly we'll have finished the pre-feasibility study. What that allows you to do in Ecuador is it allows you to go to the government and negotiate your investment protection agreement terms for exploitation. We already have an exploration investment protection agreement, but the PFS will allow us to do the exploitation negotiation. And what we're seeing there is a reduction in tax rates for everybody. It used to be 25%. Recent terms we've seen are 20%, so we expect to be able to achieve that. The royalty range has been lowered. It used to be 5 to 8%, and everybody basically got 5% in their terms. Now it's 3 to 8%, so we're fairly confident that we can get the 3% when we go to negotiate our IPA. So that, a lot of positive steps have been made on that fiscal regime front in the country. It's roughly 2 years to finish a feasibility study and permitting there, so you could have a shovel in the ground in 2025, and then it's roughly, it'll be a little bit shorter build than the 3 years with the new PFS because it is smaller capacity out of the gate, so it'll be roughly a 2.5-year build for the project to take it forward. So just a bit of benchmarking here and where we sit. These are all the projects in the world that produce over 250,000 ounces of gold a year. We're the 5th largest that's held by an independent, which is the yellow bars there. The other ones in blue are held by producers. So we think we're in the sweet spot of where majors are looking to replace reserves. Obviously a lot of these other projects around us, and I apologize, maybe a bit small on the screen, but whether it's Hard Rock or Blackwater are getting built right now. So we think these are the type of projects that are getting built, and the multi-decade large projects that majors are going to want to put in production. And then this slide, it's a lot of data, but it's pretty important because a lot of people ask the question, well, what about grade? You're a lower grade deposit. And just to show you we're not cherry picking data, if you look on the right-hand side and all these open pit milling projects that you see, Cangrejos is at the bottom at that 0.72 grams per ton gold equivalent. If you take those grades and adjust them for strip ratio, so how much waste people are moving to get at a ton of ore, we go from the worst in the set to the second best in the set. So, You know, we have about a 1.1 to 1 strip ratio. This is crucial for operating mining costs and understanding that. It's not the full picture, obviously. There's processing costs and other things, but you know, this is a key part of why this deposit works. Is it's, you know, a very homogeneous deposit with a low stripping ratio. You know, lastly, and I've had this slide in here for a while, and I'm hoping one day to take it out and that it changes, but you know, if you went back to 2017, we had a $184 million US market cap. Since then, we've quadrupled the resource. Gold's up 50%, copper's up 50%, and not our share price, but our market cap is down 25%. So, you know, I think that's the value proposition for people. Obviously, we know we're in the tough part of the Lassonde curve between, you know, a PEA and getting towards permits. But, you know, for people who are longer term minded, this will be a mine one day, and we think that's the value proposition for people right now. You know, lastly, we have a very active community program there between reforestation, education in the community, sports in the community, creating entrepreneurship programs, mostly female-led, and health was a big one during COVID for interacting with the nearest town, which is called Valle Hermoso. It's got about 700 people in it. So we're very active there and on the property for reforesting areas that were previously cleared for cattle grazing that are not on the deposit areas. So, you know, in summary, we have a very valuable project here. We've progressed it pretty steadily since 2014. Next step's going to be the PFS that you will see shortly, and hopefully that reconfirms to the market and people that this is extremely economic project at today's metal prices. So, thank you for listening.